Another potential problem: the average person may not completely understand that some inflation is considered normal. Who's that considered normal by? Because inflation is not a monetary phenomenon, it's a fiat money phenomenon. You had a $20 bill a year ago, you got a $20 bill today, it's the same $20 bill. And what it buys you today is vastly, vastly different. That's where your gold comes in.
Welcome, seekers of financial clarity. Join Lynette Zang as she unveils the great taking. Follow her journey from Nixon's departure from the gold standard to the ongoing trend of decreasing interest rates, exposing the monumental wealth shift orchestrated by debt accumulation and central bank interventions. Get ready to witness the intricate tapestry of economic evolution and its profound implications for global wealth distribution. So, keep watching and keep learning.
So this is really what we've been talking about. Now, what is this book about? It's the taking of collateral. Globally synchronized debt accumulation super cycle, which is what has been engineered by the central banks by consistently lowering interest rates. At the peak, they were at intraday, I think it was 21 and change interest, down to zero, and was held at zero for 15 years. But it includes, this great taking includes all financial assets, all the money on deposit in the banks, all stocks and bonds, and hence all underlying property of all public corporations. And I know that this can seem outrageous, but the difference between inflation and hyperinflation is simply the speed of that inflation. If it happens slowly, it still happens, you just don't notice it. Privately owned personal and real property financed with any amount of debt will be similarly taken, as will the assets of privately owned businesses which have been financed with debt. And keep in mind that if you owe somebody money on that collateral and you can't pay it, guess what? They're going to take that collateral away from you. Private, closely held control of all central banks and hence of all money creation has allowed a very few people to control all political parties, governments, their intelligence agencies, major corporations, and of course the media. And everything, we have a semblance or an image of choice, but in reality, everything is owned by a very few people. And these entities have been consolidating over the years, the banks particularly since 2000. When a bank fails, the good assets go to the few, and then the bad assets are absorbed by the many, the taxpayers, right? So by controlling the narrative, that's that perception management where they want to control how you think and therefore how you move into and through a circumstance. And it's easier to get people to cooperate with deception because once you know the truth, you make different choices. And that takes away some level of their control. And remember, we vote with our wallets and we vote with our purses. And so this is my vote. It's out of the system. And as the Bank for International Settlements so aptly states, gold, physical gold in your possession is the only financial asset that does not run counterparty risk. Therefore, does not risk the loss of that collateral. Residual anger about high inflation in recent years appears to have soured consumers' views of the economy. That's not a good thing. Since the consumer is 70% of the economy, we need them to keep consuming. People are still angry about the inflation we saw in 2021 and in particular 2022. There's something about the salience of the bill for lunch that you see every single day that just maybe resonates in your brain relative to the pay increases you get once a year. So by design and from the beginning, why was the fiat money set up in 1913 to begin with? Number one, because government wanted to tax you without having to go through legislation. And inflation does that because they're the ones that get to use the money first when it has the most value. By the time it trickles through the system and we get it, it has a far less purchasing power value. And number two, corporations wanted to pay you less, but they knew if you're used to getting $10, you're not going to accept $5. But if they can make that $10 spend like $5, then that creates that nominal confusion in both cases where you're looking at a higher number, so you think you're getting more, but inflation is moving much more quickly than the raise in wages. And so in reality, corporations are paying you less and less. And this is what has enabled that wealth and income inequality. But people are starting to wake up and things are shifting. And I hope they wake up fast enough because we vote with our wallets. And this is my vote. The discontent comes even as a strong labor market, appreciating home values, and a stock market rebound has made some positive about their financial situation. Because there's nothing more depressing than opening up your 401k statement and seeing your holdings go down. So if they can make things appear to be going up, then you feel wealthy, you're more likely to continue to spend. But in reality, when you go to the grocery store, when you go out for dinner, when you go out for lunch and you see those new prices, doesn't it give you cause for pause? Doesn't that make you wonder what's really happening here and if you understand the truth? Because the truth is we're at the end of this whole fiat money experiment at the end. Another potential problem, the average person may not completely understand that some inflation is considered normal. Who's that considered normal by? Because inflation is not a monetary phenomenon. It's a fiat money phenomenon. It's by design because inflation creates nominal confusion. Nominal confusion is really simple. You had a $20 bill a year ago. You got a $20 bill today. It's the same $20 bill. But what that $20 bill bought you a year ago, 6 months ago, a week ago, and what it buys you today is vastly, vastly different. That's where your gold comes in because gold holds your purchasing power over time. They can manipulate it. They can make it look this way or that way. The truth lies in the physical only markets where you can see these coins making new highs, and especially in the ultra rarities, which are where the 1%ers hang out. But, okay, some inflation is considered normal by central banks. And in fact, the Federal Reserve, which sets U.S. monetary policy, aims for 2% increases in prices each year. That's so that it's low enough that you don't ask for more money and you don't make any of those changes. Deflation is when prices decrease. It actually is seen as bad for the economy because have we not witnessed that it is very important for banks to make a profit, for corporations to make a profit, and for the public to eat it on the chin? Have we not seen that over and over and over again? Deflation, if you have more money to buy goods and services, why is that a bad thing for you? But the reality is there's only one way to fight inflation, and that's with deflation, and only one way to fight deflation, and that's with inflation. And the way the system has been set up, it's deflationary. And you can see that from the decline in interest from the 70s to the 80s, etc. And so, yeah, you use the inflation to counter that, and interest rates were the key tool in regulating the rate and speed of inflation. So when interest rates were anchored for 15 years at zero and encouraged so much debt from governments, from corporations, from individuals, well, if your income keeps pace with it, and the confidence is retained in the currency, you can make it last a long time. And so people get used to it like that's the norm. But the reality is, it's a Ponzi scheme.
Thank you for joining us on this fascinating voyage through The Great Taking with Lynette Zang. Remember, the knowledge gained today is a tool for your financial arsenal. Stay connected to our channel to hear from future experts, and may your financial decisions be guided by informed choices. Please like, share, and subscribe to our channel if you have gained some knowledge from today's video. Thank you. Have a good day.